at the longer period of time from 2006 to 2013, the compounded average growth rate will be 32.8%, which is quite dramatic. Yeah, that's the first page I already had. Then the ODI stock, that's flow, that's stock. Stock is reached $660 billion, ranking 11 worldwide. End of the year before, Chinese investors have established 25,000 enterprises overseas in over 184 countries or regions. ODI accounts only for 10% of China's total overseas assets. That's a different concept. In terms of the stock, a relatively smaller population compared with China's huge foreign reserves assets. ODI breakdown by industry. They ranks from the billing services, financial, wholesale and retail, manufacturing, which accounts for more than 80% of the total outbound. Breakdown by countries. We forget about those Cayman Island, BVI, and some from the United States, Australia, Singapore, United Kingdom, those countries. Then the main investment bodies. In the financial industry, most of them are state-owned banks or state major controlling share or large share. In the non-financial sectors, about half to half. But last year, or before last year, the private sector surpassed SOEs, become a major one. I believe that's will be the future for next decade. There's something about the ODI with USA, with this country. China's ODI in the United States has been growing rapidly during the recent years. According to the Chinese official data, China had invested US dollars 3.87 billion in the United States in 2013, surpassed the US 2.82 billion. So there is more FDI from China to US than from US to China in the year of 2013. At the end of 2013, China's ODI stock, in terms of stock, US is still much bigger than China. The Chinese ODI to the United States is amount to 21 billion as the total stock. American stock about something about 300 billion. They continue. They are, in terms of the China's ODI stock in the US, the top five sectors are financial industry, manufacturing, mining, wholesale and retail, and real estate. That's some general pictures, facts and figures. Shows the emerging of the ODI of China, and it shows the structure, the composition, the flow, and the stocks. Some observations. First of all, the ODI in manufacturing sectors or industries is not very active in China. It's not show the as a world factory or a big country for manufacturing. It's not compared to that. Really developing Chinese industrial power. The problem will be could be China still in at the low end of value chain, so cannot like the true international translation companies can shape their value chain vertically and horizontally. Currently, there are a few large Chinese multinational companies that can control the upper end of the value chain and form the vertical integration, as just I explained before. Another observation is Chinese ODI stock in mining is relatively high, about 20%, including a strong motivation in seeking natural resources overseas. However, some of them, maybe most of them, maybe not in the right cycle, right time. So they are suffering some problems now because of the low price of commodities. At the same time, China's ODI in the financial sector is also relatively high, takes about 18%, but mainly concentrated in banking sector rather than in the securities, insurance, and other financial areas. Investment in the securities and insurance is relatively low. Service industry, small and scattered, with small in size. But the investment in utilities sector, say transportation, telecommunication, and logistic infrastructure, have already started to attract investment. Currently, it's not a big portion, but it has a big potential. Investment in technologies, high tech in particular, regardless of the software and hardware, now reached a significant scale. That's our let's talk about One Belt and One Road initiative. The Xi Jinping raised the initiative One Belt and One Road. This is being called as New Silk Road Economic Belt and the Maritime Silk Road, which will connect China with Central Asia, Europe, and South Asia. China promoted to establish of the Asia Infrastructure Investment Bank and BRICS Bank, targeting infrastructure investment along the One Belt, One Road, and encouraging more Chinese enterprises to participate. The One Belt, One Road initiative is a grand overseas strategy for the next decade for Chinese companies. This map shows what we mean by One Belt and One Road. It's covering current direct investment in this region is quite small. Account for 12 billion in 2013. Account for 11.7 of total investment. By the end of the year before, direct investment stock was 76 billion, accounting only for 11%. However, ODI to related countries has been growing remarkably since 2011, if you look at the curve. The strategy is aimed mainly at the increasing the need of the region's infrastructure. According to the Asia Development Bank, there is a huge infrastructure gap or shortage in this area. Initial fund for the One Belt, one node will be mainly backed by China's foreign exchange reserves and be implemented via Asia Infrastructure Investment Fund, brings bank loans and other development financing. Under this initiative, China's overseas investment is expected to grow rapidly in the coming years. The goals, first of all, to provide funding, technical and management support for infrastructure projects in this region. Second, to digest China's domestic excessive capacity and boost China's infrastructure and equipment export. Third, to encourage Chinese multinationals to go abroad and to participate in the international competition. The last one, to promote regional economic cooperation and development. Some issues and risks. So the first one is the role of government and enterprise. The government should speed up the negotiation on regional free trade agreement or bilateral investment protection agreement, promote trade and investment facilities and provide services for ODI of Chinese enterprise. Also, the government should probably handle potential geographical issues, creating a better environment for enterprise to play. The government should not intervene in business decisions. Enterprise should focus on commercial interests instead of undertaking political and foreign affairs mission. Actually, that's it's a problem. Some company claims they representing the country to secure some resources or to try to obtain some high tech, and there is no clear distribution between the company got the mission from government or purely commercial companies. So they confuse the market. So I think you want to have a good marriage, you must clarify your function, your role. Public commercial attributions. Enterprise with a function to provide public goods may have preferential loans and related policy support from government. Commercial enterprise should be aimed at profit maximization and profit making and must assume some responsibilities for its own profit and losses. So the nature or the functions of the two kinds of enterprise should distinguish. That's also part of the PPT as conditions. Improving the structure of China's ODI. The manufacturing portion should be increased, and the infrastructure or utility should be increased, and the value chain, the position on the value chain should be upgraded. Some legal issues, a lot of them. I just select some of them. Chinese companies often lack experience. Just Lu said, we are in the transition from rule by law, rule by people, or rule of law. So they should fully understand or aware the importance of the law. A lot of laws, in particular Chinese enterprise, should pay attention to the legality of certain operations such as anti-bribery law, money laundering laws, and carefully deal with the country targeted by various countries, sections, and banks. There are some political risks, including risks associated with politics, war, nationalization, breaches of contract, etc. The region covers of one belt and one road. Most of the countries is pretty high political risks and other risks. Many acquisitions are blocked by host countries' government under the national security consideration, including this one. Foreign settlement of China's threat act as a barrier to China's going out policy, especially for large SOEs. There are social, cultural, and religious conflicts as a basically non-religious country. Chinese people sometimes may lack understanding and respect for host countries' cultural and religious customs. A labor issue. There's no truly independent trade union in China. Chinese enterprises usually lack of experience to deal with their labor rights issue. Cultural integration. U.S. business school, India's Tata Group's acquisition of Land Rover, as well as China's acquisition of Volvo, have been used as case studies to identify the differences in cultural integration, products development, and human resources after merge. While Land Rover had significant success, the Volvo acquisition were not definitely a failure, has been comparatively overwhelming. Some of the China's overseas acquisitions have often ended with failure, such as TCL's acquisition of Thomas TV business and Alcatel mobile phone. Six acquisition of Singapore Motor and Pinggan's acquisition of Fortis Finance. The issue of cultural clash described to be a high lighting and discussed in depth. The patent tuition, patent cost in 3 years, so we must draw the license from them. Outlook. China has already become a major economic power in terms of GDP, foreign trade, input and export, FDI, foreign reserves, manufacturing. So we expect the rapid growth, which is much lagging behind the outbound investment compared with other areas. So we expect a rapid growth of Chinese outbound cross-border capital initiatives, activities in the coming decades. The One Belt and One Road initiative can be seen as a concrete going abroad plan and should lead to a period of rapid expansion of China's overseas direct investment in the region. Possible developments. In the process of China's capital account liberalization and due to the global economy, asset price may be undervalued, which may apply Chinese company with buying opportunity. cross-border expansion of China's firm will help digest excess domestic capacity, accelerating the upgrading and adjustment of industrial structure, encouraging effective use of foreign exchange reserves, and exert the positive impact on global and regional politics. We expect the shares of overseas investment in manufacturing and infrastructure to rise significantly, while China's ODI in the financial sector will maintain in its rapid growth momentum. ODI flow could surpass 350 billion by 2025. Assuming the trend continuing in the upcoming years, factoring in the development of over the next decade, assuming 50% annual flow growth before 2020, and 8 to 10% growth from 2021 to 2025. The two phases. But the last 6 years was 38% compounding growth rate, average growth rate. So the possible conclusion will be China's outbound direct investment flow may reach a level of 350 to 400 billion per year by 2025. This will be second in the world, only after the United States. In terms of stock, China will accumulate over $3 trillion overseas, while we're ranking China's ODI stock within the top 5. Currently, it's top. It's ranked number 11. So, thank you.